last piece of this thing out of the water. Every little thing an experience. Like I said, you come by, hey, we got some wine for you, maybe a cigar, we go hang out in the hidden speakeasy if you can find it. But it's just from what we present, what we do, next level, man. Oh, the hidden speakeasy? No, there isn't one. No. I told somebody the other day on the phone. There's a hidden speakeasy. Well, how are they supposed to know that you can't know to look for it if you don't know it exists? No, I know, but like, you know what I mean? It's gonna be really hidden. I got some Disney tricks up my sleeve. I need a mute mic button, man. I just ruined it, didn't I? Okay, let's get a new place. Let's go to a new place. New lease. We're gonna go rent something. Hey, welcome to the closing beat. How we doing? Pretend you didn't hear any of that. Hope you're having a good day out there. Happy Thursday to you, by the way. All is good with you? Welcome to our show. We call it the closing beat because, we're Jazz Wealth, and we like music. We like jazz music. We like how it relates to the stock market and being talented in your skills and everything. And one of the ways that we're going to share that is tonight, Thursday, Wine and Wealth, actually. Every Thursday night, we do a class. Just come grab a drink, come hang out with us. If you're one of our clients, we actually go through usually a lesson. Tonight's going to be a handful of lessons. We're going to talk about a synthetic stock token warning. Huh? Have you ever heard those words? There you go. Synthetic stock token warning. We're going to talk about something in Nest Egg, do a little mutual fund geekery, FSA. If you have an FSA, I'm going to show you a trick for that one for 2021, and new deposits in the dojo. Sadly, we will not be doing this in the speakeasy there because, let me just see if I can show you. Yeah, the speakeasy's gone, man. I'm going to raise this up. That's what the speakeasy looks like at the moment. Usually right behind me is where we have that, and we've officially torn it down. We're ready to move it. You can see the whole place looks like a big old hot mess right now, but we've left that studio there, and of course what's behind me. That's what we're going to be working with until we can get all of that moved on over to the new place there. So hope that goes smoothly because so far a little bit of work there, but we'll dive into it. So tonight I'll just be right here. We'll come hang out and talk about all of that good stuff there. Also, last week we did rebalancing. We always like data here. We don't like the actual opinions or what you should do. We like to base it on data. So last week we did rebalancing based on the data there. Hope you'll check that out. It's also available for research members. If you want to join our research site, you can. It's $13 a month. You control the membership. So we have no say whether you stay or you go. We built it that way intentionally. But lots of cool stuff in there. We're actually working on a few cool things right now. I'll do a video for that, one of the ideas that I have. So we'll see you there. It's also free for clients, so you don't have to pay for that. All right, as for the stock market today, basically green. The Russell pulled back a little bit there. We had initial jobless claims. They ticked higher again. That's not cool. People are just seemingly taking claims there. Let's take a look. Here's initial jobless claims in purple. So we ticked higher coming off lows. We're at a lower point recently, but still way too high. And then I put the 4-week moving average in there just to kind of show how things are flattening out. You could tell by this here. But we're basically flatlining here. That is not what we need. We need this to continually downtrend like we've seen. Because if you start zooming out, you want to look at something pretty scary here. We're still very, very much higher than where we should be compared to a normal, hopefully growing economy there. So we're at 419. We were expecting a downturn of down to about 360 to continue this downtrend. Didn't happen. We got up to 419. 4-week moving average is flattening there. We also had existing home sales come out. They did rise, but at a slower pace. And the National Association of Realtors said that there's now a 2.6-month supply of homes out there. That's a slight uptick. And that the demand is softening here. So something maybe to consider. If you're out there looking for a home, seems like maybe the buyer, we're getting there. Maybe the buyer's at least got some hope of buying a house out there. I'll start with the S&P here today. Congratulations, by the way. If you're an American, you're here in the U.S., trading the U.S. markets, the S&P, despite this drop over the last couple days, the S&P is officially the most overbought market in the world in the short term here. Well, midterm, kind of short term. Officially the most overbought in the world. If you want to know, just for fun, because I got bored last night, was doing all kinds of things, Switzerland comes in second place as the second most overbought market in the world. And I believe it's Taiwan, a very, very close third. So the U.S. leads the way there. Those three, by the way, are the only ones in the world that are also still above their 50-day moving average. That'd be the blue line on my chart there. And the 50-day is just basically a short-term sign of strength, or kind of a midterm sign of strength, right? Are we trending higher than what we've seen over the last 50 days or not? Those three are the only ones. The rest of them are pulling back. You want to look around the world a little bit. I'll show you some ETFs while we do it. Norway is the most oversold, although it has been recovering there, followed by the UK, EWK. Or, I'm sorry, EWU would be the UK. There you go. Would be the second most oversold. Bear markets or corrections in the only in 4 countries. So you have either a 10% pullback or greater, over 20% off of their highs in only 4 countries. You've got China. I'll use the MCHI today because I usually use other ones. So there you go. Under the 50-day moving average, you're over 20% off of highs there. You got Malaysia, EWN. Well, we don't normally talk about this, do we? There's something a little different for you. Malaysia would now today be 14% off of highs. If you look at Africa, this would be South Africa, actually. EZA is a ticker you can use for that one there. It's exactly 14% off of its highs. And Spain, El España, down 11% off of highs even after today. If you had invested in the entire world, did you know that that's an option? You can invest in the entire world, every single market out there. I believe it's equally weighted. Oh, no, it's not equally weighted. I'm sorry. But had you invested in the entire world and equally weighted your dollars across every single one of the countries, you'd be up 8% for the year so far. Just give you an idea where that's at. You would currently be 7% off high, so you'd also be experiencing a pullback, even though the S&P seems to not want to do that. So that's a quick look, a different way of going about it. We try some, different things here, keep it interesting. Let's look at the Russell 2000. Pulled back a little bit after doing a lot of heavy lifting there, right? So if you're looking at the Russell 2000, you saw that decline, 10% drop off of highs, a little over that. You got your recovery bounce. It's normal for it to take a break. I have no problems with that one there if you're looking at the Russell 2000. We look at the Dow. It's hinting at a breakout, right? We're sitting here at these highs, chopping around, normal summertime action. If you have a stock or you have a ETF or a mutual fund that's just not really plugging along, and some days are great and some days are down, that's very normal for this time of year. And so the Dow, we kind of give it a little bit of a pass. But Salesforce.com, ever since breaking out of that downtrend, looking better and better. Today, was it today? Yeah, today is the day that they officially have taken over Slack, which used to be ticker symbol WORK. So now that's owned by Salesforce there. That was one of the stocks in the Dow that was in the news. DOW, another one in the news there. One of the better pullbacks of stocks in the Dow, the ticker symbol DOW there. They had earnings come out and they said prices can increase. It's not a problem at the moment, so they have no problems with inflation. And like I said, it's one of the better pullback stocks that are out there. Now, if you're playing Guess the Dow, chances are you're floating around in the leaderboard there somewhere because we've not really been trending higher or lower, but Cody's going to tell us where we stand at the moment.
We got a small update on our leaderboard today. We got Glade, Linda, Lori, Tony, and Andre. Our top 5, Andre was our leader yesterday. If you want to play, you can go to jazzwealth.com/guess the Dow. You can get your guesses in for next week for your chance to win $100. You always say there's no marketing pitch with it. We don't put you on an email list. There's a lot of emails there. It's crazy that we don't, market to those people or sell their emails, but something to think about.
You hippie. You want to sell their emails?
I mean, yeah.
How do you sell it?
I personally, I don't have that say. I would.
How do you sell an email? I never got how that works. Is there somewhere? No, we're not going to sell their emails. Come on, man. Let them have a good time there. You win $100 if you are the winner. The winner is decided by the Friday close on the Dow, and then we announce them on Mondays because we don't do Friday shows at the moment while we move that big mess that I just showed you a little bit ago. But seriously, no strings attached. Yes, there are a lot of people that have played over the time here, but we don't have any interest in doing anything with that. So your information is safe. Well, it's not even kept by us, to be honest with you. So we don't really care about that. Let's go on over to one more thing before I move on. Are you bullish or are you bearish? Right? If you just had to answer that question, you can comment if you'd like, but are you bullish or are you bearish? Well, that's a study that they actually do. AAII does that study or survey every single week. And something interesting has happened here with this survey. I'm going to show you what we've got. So every week they do this survey. They tell you the results of that survey. At the moment, there are exactly as many people bullish as there are bearish. That hardly ever happens, by the way, but it's an exact perfect match. That tells you basically that the spread between people that are bullish and bearish is nothing, right? It's zero. It's perfectly flat. Well, when you look at something like that, it's perfectly even. It's the first time since January, it's basically the end of January, where that spread came in basically at even there. And so what I'm going to do is actually put together some data on that. What does that mean for the markets whenever that happens? I believe it's happened a total of 45 or 46 other times. Does the stock market do bad from there? Does it do better? Or does it just underperform itself, overperform itself? That's kind of the look that we want to do there. It's actually a very popular study, and we just kind of collect the data there to show it to you. But there you go. The people right now are evenly bullish and bearish. Now, this study's not done on the exact day, so this would have happened before Monday also. So that gives you a little hint. That could be a big change next week. You might see a spike in those that are bullish there. So we'll see. We will see what happens there. But where do you stand? All right, let's take a look here through some of the sectors and we'll get moving on, right? That's what we do. So sector breakdown here today. Kind of interesting. I'll go to real estate, taking a little bit of a break, 0.75% off of highs there. In this pullback here, what I found interesting today was just looking through some of the positions that we own. Extra storage space did not participate. Right, so real estate pulled back a little bit. This went in the opposite direction by a factor of 1, like a perfect opposite direction there. You got public storage space also not going with the real estate sector today. Those two positions make up about 6% of our real estate fund, and I noticed that anything in that category just kind of held its own, right? So it really wasn't that big of a deal today if you're looking at that. Now, I think it was Crown Castle was your biggest mover today. Yeah, down 4.5% on the day. That was earnings they beat, but they guided about 50% less of the total little micro cell towers that they're putting out there. Little guys, Crown Castle is, I think, the largest cell phone tower operator out there. They changed to being a REIT back in like 2013 or something like that. So it's really a real estate investment trust now. And so they're going to they were going to shoot for like 10,000 of these little small antennas. Now they're going to only do 5,000. Well, that makes a big difference because in a REIT, they're paying out over 90% or more of their money, right? All the money that they bring in from leases and all that stuff. So they're supposed to pay out 90% or more of that. Well, if they're going to do less business, that's a direct impact on the total dividend that they would actually pay out, which is likely why you saw the stock kind of falling here today. That's a high margin business there, right there. So that's what's going on there. What else do we have here? Let's take a look. Regional banks, not a sector, but we'll talk about that. Pulled back a little bit, continues to be in a downtrend there. Oil up 2% on the day, an amazing and very cool reversal for oil dip buyers there. That looked pretty good. Interestingly, energy stocks pulled back just a little bit on the day. Financials also lower as well. They haven't been participating here, right? Hey, stock market's at new highs. Well, financials just sitting back not doing anything. What gives? Huh? What's going on there? You know what was moving higher today? Tech. You got tech stocks, which have led the last couple bounces in the stock market, continue to do the same here. So if you're looking at tech, let me give you a little something extra there. Overbought stocks. If you happen to be in any of these, you got Oracle, one of the most overbought stocks right now in the tech space, and Autodesk, which doesn't tell you a lot because that's kind of a fresh breakout there, but that's what you have on the upside. On the downside there, you've got Western Digital, I believe. No, Western Digital. There you go. Western Digital, one of the more oversold stocks. So if you think that the tech sector still has room to run, you want to buy something that's trading at a discount, you might look at something like that. And then you've got Seagate, which has been really not participating for months now, one of the more oversold. Cognizant, I think. Yeah, Cognizant's in there too. It just doesn't show up on my radar because it's slowly downtrending. There's no, you notice how the rest of them were sort of aggressive drops. You don't really have that there, so a little bit different. Okay, let's go on over to earnings. NVR, it's a home builder. So kind of interesting with the news that came out there. They were mixed on earnings. Orders as a whole down 6% for them, if I remember right. But the average home price is up 20% year over year. So that explains why the lower orders, right? So if your average home price is up 20%, but not as many people are ordering, do you care, right? As long as there's not a one-for-one split there. Now, you got to be careful when orders start to slow down and prices start to rise. in the case of home builders, we got rising costs, rising labor costs and things. So that can only go so far, but that's what happened with them. CSX Railroads beat on its highest analyst estimate there by 37%, thanks in part to what's known as its operating ratio. So, quick lesson. Railroad companies can be rather easy to analyze on a fundamental basis because it's pretty straightforward, right? I mean, it's a railroad line. You put stuff on the rail car and you send it. So are there more rail cars going a mile or are there less rail cars going? So it's a very easy thing to analyze there. And one thing that they look at, just like Netflix, you look at subscribers, railroads, people like to look at their operating ratio, where their operating ratio came in at 43.4%, as opposed to like 56 or 57% that it was before. The operating ratio is, don't let it confuse you there, it's just their operating expenses as a percentage of their revenue, right? So that's how you break it down. So obviously 43% of their, or 43.4% of their revenue is expenses. So pretty impressive there, because if I remember right, so CSX is called they're a class 1 railroad company. There's class 1, 2, and 3. They're the largest, class 1. You normally have operating expense ratios around 50 to 55%, which is normal for them as well. They used to be at 57.1. So you'd say, all right, that's pretty good. To be at 43 was really impressive for them, and that's likely why you see such a large gap today, because that's pretty much the only thing people focus on there. The one negative, there's maybe a couple negatives there. Car loads were down, so the number of car loads per train were actually down a little bit, and the total revenue per car load was down, and that's largely probably because of a lot of the stuff that's just sitting around and is not getting shipped right now, and so that's just sitting there. So that's maybe pent-up demand, we'll have to see, but because they're operating so efficiently right now, investors cheered them on. So just another one to take a look at. Actually, we're going to go over here. All right, another one you could use, actually I put on the list, good measure of the economy is Discover, right? It's a good look at general consumer health, right? Obviously, are we swiping the card or are we not? Well, one thing that we look at there is 90-day delinquencies, right? If you're charging on a card and they have no way of getting the money back other than good faith and threatening you with credit there, how often do people pay before they go delinquent over 90 days? That finally fell under 1%. People are paying their bills. So they're swiping their cards and they're paying their bills. That's a good thing. Charge-offs are down to 2.45%. And what makes you say that they are, people are swiping their cards and paying their bills is you look at something called payment network volumes, which I've got here somewhere. Payment network volumes essentially up 30% compared to last year, so you got a huge beat in earnings there, right? The stock was down just a little bit, but I didn't catch any other news there. All in all, you say the health of Discover is good. The health of the consumer is obviously getting better and better because they have the cash now to pay off the bills. So that's a good thing. Another sort of lender is One Main Financial. These guys are known as these are like the subprime mortgage people, right? They lend to people that don't have the best credit history, maybe have a temporary ding on their credit or anything. Their 90-day delinquency is even more important, right? Because we're lending to riskier borrowers here. That's what they're known for, and I believe they're the largest overall. 90-day delinquencies for them down to 1.3% as opposed to about 2%, which it was there before. And overall originations, home loan originations for subprime borrowers using One Main Financial or their subsidiaries, up about 70%. Compared to last quarter, not compared to last year, just quarter over quarter, 70% more people buying homes or applying to buy homes that have rougher credit. Is that a good sign or is that a bad sign? I'm not sure on that one. They seem to be paying their bills, so let's hope that continues. Texas Instruments, we happen to own this one, so got a little bit of a hit here today. We've got it in a couple portfolios. Down 5% on the day. Earnings came in. They beat by 9%. Weaker guidance going forward, basically, is what they gave. Not a good sign for semiconductors in general, but I think they'll be just fine. Whirlpool down 1% on the day. They beat on earnings, beat on revenue, raised guidance considerably going forward. They're able to pass through price increases, at least at the moment, and so that's what you have there. And Las Vegas Sands, which I don't know if they're going to have to change their name or what here, but they lost more than expected. You got Macau, Singapore, obviously restrictions over there and maybe things getting worse. And they're not really Las Vegas Sands. Oh, they call them Sands now, don't they? I think it's just called Sands because they're selling their Las Vegas properties. So it's not really Las Vegas Sands. I don't know. Nonetheless, you got technical pattern there, quite interesting. If that makes a higher low, see what it's trying to do here? Got to bounce off of lows. Everybody took a shot at an oversold stock, and now it's trying to pull back. If that starts to reverse course, you're going to get all those people that said, darn it, I missed that first bounce. They'll come back. So we'll see what happens there. And we'll keep up with it there. Stocks in the news. And then I'll take your questions if you have them. Tesla didn't move a whole lot today. Yesterday, Elon Musk said that Tesla still owns some Bitcoin. SpaceX owns some Bitcoin. Didn't say how much there, but he said Tesla would probably start taking Bitcoin sooner because magically they're all of a sudden more environmentally friendly. That did have an impact on Bitcoin both yesterday and today. Up another almost 2% on the day for them. I think that conference is over too. Bank of America puts their dividend at 21 cents. They were at 18 or something before, so a slight increase there. Plug Power takes a guy from Tesla, puts him in charge of global manufacturing there, so that could be a good thing. Didn't really move the stock. I'm not sure if that guy was a big deal at Tesla or not. Visa buys Currency Cloud for $700 million to make global transactions a little bit easier. At least that's what Currency Cloud was doing there. And PG&E Corp out of California they're going to start burying their power lines instead of leaving them the way they were that caused those fires there. Oh, and by the way, Uber is buying a logistics software company for $2 billion. My first thought is, how? Where's the money coming from here? $2 billion for them. Now, they have a lot of cash on hand, but I'll bet you Uber says something about selling shares, maybe raising some more debt. I'll bet you that's in there somewhere. Oh, they're going to have to do something because they don't have $2 billion. Here we go. $1.5 billion in debt, the rest in shares. Wow. Okay, well, hopefully that works for them. It's a freight logistics company, too. It's not like, Uber logistics kind of thing. That's what you have for the day. You got a ton of earnings coming up there pretty soon. So we'll see how that goes. Of course, we'll cover it. And I think I've covered everything I want to cover there. Let's see if you have any questions there. And we'll see what we can. You got some NVIDIA. You do a little trading on NVIDIA there. Yeah. XLK still overbought. Yeah, it is very much overbought, but nobody cares. Yeah, nobody really cares there. Still overbought. And getting more and more overbought as we speak there. Yep. VTIP, ETF better than money market for emergency fund or savings account due to low interest rates and rising. You got to do something, right? I mean, that's the question probably I get the most these days is what do I do? As far as that's concerned, I got money in a bank account. It's not really paying anything. Well, it's technically negatively yielding money at the moment. Honestly, I think you could probably find a money market account that would pay you more. You're at 1.3% total yield there. I think you can probably find a money market closer to 2.2, somewhere in there, if you look around a little bit. Yep. Hey, last week you said the Wine and Wealth class was on rebalancing was going to be available for research members. Was that a one-time thing, or are all classes available for research members? Not all classes are available. There are quite a few of them that we do make available. If we happen to get into discussions about particular stocks or buying and selling stuff, so I get more specific there, then that's the kind of thing we're not allowed to have either public or in that research site. But that one is, that one with the data and everything, absolutely. Yep, great class too, by the way. That took me a long time to put together, FYI, but it's a good one. And I learned something myself by putting the data together, so I was happy to do that. I love it. You like Post as a buy. Good. Well, good for you for looking outside of other things. Now, their earnings, just every stock you look at, you just want to take a look at earnings. I think you're coming up, right? I don't know the exact date there, but can't argue with the technical pattern. Right off the 200-day, you see the decline. How much is that decline? Survey says, you're looking at, almost 15% off those highs. So anywhere between here and $100, you got yourself a nice little pullback. Very nice. Earnings would bother me. I would look up earnings just to make sure that you're not walking right into something, when you could just wait it a day until earnings come out. So careful on that one there. When are we planning on taking new clients? I don't really have an exact day there. We have a wait list up there, and as we can, we just randomly, we're just going through and pulling people off the wait list, see if they're still interested. I know that's kind of silly to do because You probably have to make a decision on a rollover or something, so we'll probably lose people out of that. But we'll still send out invites. So if you're on the wait list, that'll be the first thing we do is go, hey, we know who you are. We know your email. We'll just shoot you a quick email. If you want to join, you can, or schedule a call or something. But actively when we'll open up, it may be a little bit because, you saw the mess. We got to get into the new office there and center for a minute. Yep. Aaron says, can I use the gift card for the research subscription? Has Aaron's gift card been sent out yet? Oh, Aaron didn't email back. Yeah. So, yeah, if you want to do that, you could do that. Tell Cody. Just let Cody know. Let's make sure he didn't. Usually they're pretty quick on getting that out, but if it's not out yet, then roll with it. Just let Cody know on that one. Mm-hmm. Healthcare is technically overbought. That's the question. Is healthcare overbought here? Technically, in the short term, it is. However, I still like healthcare here. I think you do still have room to go because it's one of the reasons, very calm and collected move higher. And as you look through healthcare as a sector, it's like a rolling rally. It's a weird way to say it, but you have your biotechs and then your providers and then your traditional hospitals and stuff. Money's just moving around like this, right? It's really cool to see. So there's no extreme broad buying across the board that, like you see in tech or these other sectors where you get so excited that you can't chase it. So I think, if you own it, that's one where I'd say, all right, I would be willing to maybe add more on any pullback, but I'm not just going to blindly take profits here. Let it run for you. Mm-hmm. Oh, yeah. How would shareholders, for example, of Alphabet be affected if it were broken up by the government? That's a great question. Depends on how the government decides to break it up. It would likely, at least as an initial footprint, would not be the fact that you say, okay, now you have to have Alphabet, Google, Alphabet 1, Alphabet 2, and divide the businesses. They would likely change how they have to report their businesses or who can own pieces of their business. So I don't know that it changes shares or the shares just disappear like maybe some of the Chinese stocks. I think it'd be a whole different thing. And we would have a miles heads up before anything like that happened, if it ever happened. Yeah. USO still goofed up? Absolutely. I have it on my list still, but I never look at it. I never, ever look at it. They ruined it. They ruined a good ETF when they got scared at the negative oil prices. Yeah. When will the first closing beat be in the new building? I don't know. We're actually going to have to do it with the one set. We're going to set up, right? We're going to set up the one set, do all the videos from there, and then, but this thing here, the behemoth behind us, shoot, I don't know, man. That's a tough one. It depends on how long it takes you to drive on across the country and come pick up some of this stuff and move it for us, man. I know you ain't doing anything. All right, I'm going to wrap it up there. Get ready for our class here tonight because we got a lot to cover on the class. We have some fun. Do little short snippets of different things to talk about instead of like one big topic. And then, of course, I'll stick around and answer questions as long as you guys have them. We'll see you right exactly here, 8 o'clock tonight. Enjoy the rest of your day. And, yeah, thanks for watching. See you later.